Hello, very good morning to all and welcome to today's Daily Dose of Market Insights. Very good morning, I'm Kelvin here. Today will be Tuesday, the 28th of January 2025. So as usual, before we start our very interesting and exciting Daily Dose of Market Insights for today, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so as usual, let's have a quick dive on what has taken shape yesterday in terms of the intraday market, intraday performance of the various respective cross asset classes being impacted by the relevant news flow or economic data release, and as well as today's Daily Dose of Markets, I will cover a very interesting and important market intermarket dynamics that is more pertaining to the US stock market. And as usual, we will actually have a very thorough view on our intraday technical analysis on those various broad-based cross asset classes ranging from the dollar major pair, the major stock indices, and the two key commodities that we cover on a daily basis, that is gold XAU/USD and West Texas crude oil. So without further ado, let's have a quick recap what has taken shape in the markets yesterday. So if I were to actually show my screen over here, what we could see over here is that yesterday we do have a rather mixed performance on the US stock market. Yes, we know that yesterday's key news has been this underperformance of the Nasdaq 100, where it plummeted almost by -3%. And for those who followed our Daily Dose of Market Insight yesterday, in early Asia session, there was sign of a crack on the Nasdaq 100 from a technical perspective, where we flip into a bearish bias, and the bearish bias hit our support level yesterday on the start of the US session. So later I'll touch more about that, where the key levels to look out for and the trend bias for today on the intraday basis when I cover the intraday technical outlook for the Nasdaq 100. And what's interesting over here is that the Dow Jones Industrial Average managed to outperform by positive 0.65%. Okay, the reason why Dow Jones managed to outperform because it's not heavily weighted by the mega cap technology stocks, where we start to see that we do have a rather healthy market breadth yesterday on the S&P 500. So what we could see over here, in fact, there are more greens than red. All right, so the red has been primarily centered in on the various mega cap stocks that causes the Nasdaq 100 to underperform, particularly in the semiconductor industry within the technology sector. So one of the reasons why the semiconductor plunges, especially NVIDIA, that has a significant impact on the semiconductor industry within the technology sector, was there's a much more efficient startup based in China, which is called DeepSeek over here. So because of this DeepSeek capabilities that is able to actually obtain the same we call it efficiency as OpenAI. Don't forget, OpenAI is considered as a crown jewel in this ongoing AI, we call it a productivity drive that is driving the outperformance of the US stock market, primarily focusing on the mega cap stocks, which is the Nasdaq 100, that is driving the outperformance of the US market since the last 2 years, and that has been taken shape much more prominently last year. So, and NVIDIA is the market leader, and because of DeepSeek capability of able to obtain OpenAI similar capabilities at a lower cost. That means what DeepSeek managed to does over here is that based on independent research, that they are able to actually get not so high-end semiconductor chips, or we call it those chips that are produced by NVIDIA, So we know that NVIDIA is the highest end in terms of we call it this AI drive. So in order to run your AI, we call it research or AI model, to get the top tier related software, hardware, or the chip, you most industrial standard is look for NVIDIA, right? So right now we have DeepSeek that come into the picture, saying that I need not have so much NVIDIA, but I'm still able to actually obtain similar capabilities as OpenAI. So that causes a fear into the marketplace yesterday on the US stock market, primarily focusing on the Nasdaq 100. Perhaps market participant has been paying too much premium to NVIDIA. And also on top of this, we have this ongoing trade tariffs that are still lurking in the background, where Trump saying that coming closer to 1st of February, there could be still a chance of igniting trade tariffs towards US major trading partners, with the likes of China, Mexico, and Canada. And do not forget, given that DeepSeek itself now is from China, and they are able to obtain, we call it cutting edge technology, almost similar to OpenAI, despite the fact that in the last 1 year, US and her allies has been trying to restrict higher end technology know-how, both in terms of software, hardware, and knowledge in terms of AI capabilities towards China. But however, DeepSeek is able to actually make it. And with that, that could actually prompt Trump administration hawks towards those guys who are hawkish towards China to actually push forward their voices to ignite more forceful tariffs towards this related semiconductor products, and also to safeguard US interests in this ongoing US-China high-tech war. So that is something to look out for as well. Right, but most importantly over here is that this issue of DeepSeek coming into the picture, stripping out of what you call it OpenAI supremacy, wipe out NVIDIA market cap. So NVIDIA actually was reduced by 589 billion in terms of market cap, and that particular wipe out of a market cap is the biggest single day loss in US stock market history. All right, and we know that NVIDIA is rather top heavy, so a further slide in NVIDIA could actually potentially create a negative domino effect on the US stock market. So something to keep an eye out, watch for. And with that, that also causes the dollar to actually rally as well. So what we could see over here is that the US dollar, 1 second, let me run that thing. Okay, so the US dollar actually continues to be on a firm footing over here. Oops, sorry. Okay, let me reduce this. Okay, 5-day. Okay, so this is the 5-day rolling performance of the dollar against the other major currency. So what I could see over here is that the dollar continues to remains on the firm footing yesterday, especially based on this 5-day rolling performance, performing the strongest against the Canada dollar, which is up by 0.46% based on the 5-day rolling performance basis in terms of very short-term time frame as of 28th of January, because I don't want to change it as we are speaking right now. Okay, so hopefully I'm able to get a quick change on that. Okay, no, it's not playing out, it's a bit hang. So then second on the pack will be the dollar that is strengthening also pretty steeply against the Aussie, which is up by 0.26%, followed by the we call it the Chinese yuan, and as well as the Kiwi dollar. So Aussie also do take a close eyes on Aussie, because Aussie is considered as a high beta currency. So in terms of market, we call it risk off scenario, the Aussie tends to actually underperform in the FX market space as well. All right, so okay, yeah, finally it's here. Okay, so this should be 28th of January. All right, and as well as the West Texas crude oil also plummeted as well due to a growth concern about this risk of a situation. And with the dollar strengthening right now, it caused a bit of yo-yo-ness or sideways movement on gold XAU/USD, because gold over here is being squeezed by two forces. Number one, yes, it tends to move against the movement of the US dollar. That means once US dollar is strengthened, gold price tend to be weak. But however, if there's an increase in geopolitical risk, which potentially could play out right now, given that DeepSeek right now is able to get the same capabilities with US based OpenAI, there could be much more potential tension between US and China in this ongoing US-China high-tech war. So that could also potentially benefit gold from some aspect of things. So later we'll touch about gold. And do not forget, for those who follow our daily dose of market side on gold, gold actually prices, if you look at gold price, what is it trading right now, very quickly. All right, so for gold, XAU/USD is actually now almost unchanged as we are speaking, 0.04%. But what's interesting is yesterday gold actually plummeted, but it plummeted very close to our said support yesterday that we highlighted. Okay, for those who follow our daily dose of market insight, our intraday technical outlook basis, we do have a bearish bias. Later I'll touch on where the next intraday technical outlook view will be for gold for today. All right, so that's actually covered yesterday's key news flow and this ongoing situation that impact the intraday performance, pardon me, of the broad-based cross asset classes. So now with that, now let me take you through the intermarket dynamics that is more pertaining to the US stock market. All right, so this particular intermarket dynamics focus on the semiconductor sector. All right, so we know that the semiconductor sector is one of the leading outperformance sector in the US stock market. So for US stock market, we can actually analyze sector performance by their various ETFs, okay, that's available in the listed in the US stock market. So this, what I'm going to do over here is the iShares Semiconductor ETF stocks. So the biggest member, so these are primary semiconductor stocks, but what we do over here is that it actually consists of purely only semiconductor stocks within the semiconductor industry. We strip no Apple, no Meta, no Google whatsoever, and no Amazon, purely semiconductor stock. But definitely the biggest weightage over here is NVIDIA. So in the ticker code is called SOX. So what I could see over here is that since hitting the all-time high in July last year, it's not able to print fresh all-time high since, despite the fact that the Nasdaq 100 and the the Nasdaq 100, the S&P 500, the Dow Jones Industrial Average continued to print all-time high last year, even before the US presidential election result in early November. But since July 2024, hitting the all-time high, then thereafter it can't make all-time high and can't break above this key resistance level, key medium-term resistance level at 2.4260, which I highlighted in red over here. And what you see over here is that yesterday it do have a daily close. It plummeted below the 200-day moving average and have a daily close below this key ascending trend line support from 5th August 2024. So what you could see over here is that from August 2024 all the way up to the high of 22 Jan to 2025, it has been consolidating in this kind of triangle-like range configuration. And yesterday there was a breakdown in this triangle-like range configuration by a daily close below it. And if we could see a subsequent successful daily close again for today, there could be a risk that this iShares Semiconductor ETF is on the brink of another we call it a multi-week corrective decline that could potentially spill over to the Nasdaq 100, and that means, i.e., the Nasdaq 100 could potentially see another round of multi-week weakness, because don't forget the semiconductor stock is a heavy weighted component stock inside the Nasdaq 100, which is the NVIDIA. And if Nasdaq 100 continue to be weak, it could slowly filter down into the rest of the US stock market as the time horizon being stretched going forward. And if you look at the relative strength, the ratio of the semiconductor ETF versus the S&P 500 very clearly is underperforming. By yesterday, it actually broke down below the 20-day moving average as well, continues to trace a series of lower low. And as well, the semiconductors ETF stocks against the S&P 500 information technology sector, they call it the XLK ETF, also underperform as well. That means what you see over here is that the semiconductor, in terms of a absolute basis and as well on a relative basis against the S&P 500, against the S&P 500 info technology sector, the XLK, is also showing technical weakness. So net overall, if this continues to deteriorate, that means i.e. if we have another daily close today on the semiconductor ETF below this former ascending trend line turns into a pullback resistance, this pink line, if it continues to plunges and show a bearish candlestick, that means i.e. There's high odds that this semiconductor stocks ETF price action may display multi-week corrective decline sequence, and that could have a negative spillover impact into the Nasdaq 100. We have been outperforming in the US stock market in the last 2 years or so, and if the Nasdaq 100 weakness continue, it may drag the entire US stock market because it's very top heavily concentrated on Nvidia, which is the biggest weightage inside the semiconductor stocks ETF. All right, so this is one of the very key intermarket dynamics that I want to share with you all that is unfolding in our eyes right now that could have a longer term impact on the US stock market. All right, so now with that, let us now have a deep dive into the intraday technical outlook on the various cross asset classes. But before that, let me expand my screen so that you guys could have a better view on the charts. All right, over here. Okay, so now let us start with the FX market first in terms of the intraday technical outlook. All right, starting with the euro dollar over here. Oops, sorry. Okay, the euro dollar. So the euro dollar actually have a negative reaction right exactly at our short-term pivotal resistance yesterday that we highlighted, where we flipped to a intraday bearish bias after that bullish bias mean reversion rebound has been played out on last Friday, 0.52 resistance level. So no change. We'll be still using given the volatile situation right now in the marketplace, 1.052 will still be a short-term pivotal resistance level to watch as well. And do not forget over here why the market is reacting negatively right now. That means why there's dollar strength coming into the picture again is because of there's this one particular news flow that I forgot to share that took place early Asia session today, that Trump continues to drum out his trade tariffs threat. That means this trade tariff threat is still live, despite the fact that last week he may sound less dovish on towards trade tariffs, especially during his inauguration speech. But however, in today's early Asia session, he pledges that tariffs will be much bigger than 2.5% and on key sectors. That means, i.e., he is so continue to target chips, pharma, steel, and copper. Then chips primarily for sure will be hitting China. All right, so something to look out for as we approach that 1st of February date where he mentioned earlier in his earlier we call it social media post. So because of that causes the euro dollar to remain weak. That means dollar strength coming into the Asia session as we are speaking right now. So it really hit our first support level that we highlighted yesterday, 1.0460/004 over here. So this will be a pullback support to watch out for today. Okay, then we will still maintain that intraday bearish bias for the euro dollar using 1.0520 as my short-term pivotal resistance. Next near-term support level to look out for today will be 1.0390. A breakdown below 1.0390 potentially exposes 1.0340, and if this level is being taken out, potentially we may see a revisit of this former minor congestion area over here, which is at this 14th of January to 20th of January. The next support level to watch out for, if 1.0340 is being taken out on the downside, which is the 20-day moving average, the next support will be at this 1.0260. Okay, 1.026 However, only a push-up and an hourly close above 1.0520 will invalidate today's intraday bearish bias view to see a potential squeeze up to expose the next near-term resistance level at 1.06 figure level, which is the one-time Fibo extension from the low of 13th of Jan, and as well as this minor swing high area of 20th of November and 6th of December. So i.e. in a nutshell, still maintaining that intraday bearish bias on euro dollar using 1.0520 as my short-term pivotal resistance. And what's up next for the sterling dollar? The sterling dollar also managed to push up yesterday but can't surpass our 1.25 short-term pivotal resistance level and starts to inch down lower. And where it got rejected right exactly at the downward sloping 50-day moving average. So we keep a bit of excess yesterday, 25.20. So 1.25 figure level slash 1.2520 short-term pivotal resistance. We'll maintain that intraday bearish bias view on the sterling dollar. Two key near-term support level to watch for today will be at 1.2370, which is correspond to the 20-day moving average, acting as a similar near-term support level as well. If 1.2370 gives way on the downside, potentially it may expose 1.2230 next, which is the minor congestion area of 21st of January and 24th of Jan. And if we do the Fibo retracement of this form of this recent rally from 13th of Jan all the way up to yesterday's minor swing high, it also corresponds closely to the 50% Fibo retracement. All right, so only a push up and an hourly close above the excess 1.2520 short-term pivotal resistance level invalidates today's intraday bearish bias view to potentially see the next intermediate resistance coming in at 1.2570 slash 1.2610. Above it potentially sees the next resistance of 1.2730, which is the minor congestion zone of 6th of December and 18th of December. So i.e. in a nutshell, still maintaining that intraday bearish bias view on the sterling dollar using a bit of excess 1.25 figure slash 1.2520 short-term pivotal resistance level to maintain the intraday bearish bias for today on the sterling dollar. All right, so now with that, let us now turn our focus to the dollar major pair against the Asia Pacific currency, starting with the Aussie dollar. So the Aussie dollar have a nice negative reaction right exactly at the short-term pivotal resistance that we highlighted yesterday, 63.30, which also correspond to the downward sloping 50-day moving average. Right now hit our first support level at 62.55 and trying to still remains weak. Why? Because there's no sign of a bullish divergence on the hourly RSI. But since it haven't broken below 62.55, I do not want to tighten our short-term pivotal resistance to be so tight. So what I could have over here is that I could preliminary put a first resistance level to watch, which is this gap down over here in yesterday's Asia session. That is gap. Okay, over here at 63.10. Okay, 63.10. So unless we have an hourly close below 62.55, then I could tighten my short-term pivotal resistance to 63.10, or else I'll just keep it the same as 63.30. Below 62.55 potentially exposes 62.16, which is a 20-day moving average. If this level is being give way to the downside, we may revisit 61.65 next on the intraday basis for today. So 61.65 is in fact the very clear congestion area of 10th of July, 10th of January, pardon me, to 17th of January. Only hourly close and a push up above 63.30 short-term pivotal resistance will invalidate today's intraday bearish bias on the Aussie dollar to see a squeeze up to expose the next near-term resistance zone, which is our key major resistance zone at 63.60 and 64 figure level. So what's this level? This 54 figure level, if you look at the nutshell, if you go to the daily time frame, is in fact that former major ascending trend line from 13th of October 2023 low has been taken out on the 9th of December last year, now turns into a pullback support. So this is 63.60, 64 figure level is our medium term pivotal resistance level. Right, so now back to the hourly chart. So as long as 63.30 short-term pivotal resistance holds, we will still maintain that intraday bearish bias on the Aussie dollar. Okay, now what's up next for the dollar yen? So dollar yen, yesterday we turned into a neutrality stance. So it actually broke below the 50-day moving average, and right now it actually pierced back up above the 50-day moving average, but still holding below the 20-day moving average. All right, so right now it's actually fast approaching this descending trend line that is acting as the first resistance at 15610 level. So this descending trend line is the line that I drew from the minor swing high of 10 of January this year. All right. So with that, I will now flip back to a intraday bearish bias because fast approaching this descending trend line, acting as my first resistance at 15610, and the hourly RSI is also coming back to, hitting back up towards the overbought region. Haven't hit yet, a bit more to move up for. So I'll be using any push up to fit this strength, putting 15680 slash 15710 as my short-term pivotal resistance zone. We also correspond to the 20-day moving average, and if you will do the Fibo retracement of this push down from the high of 10 of January, pardon me, all the way down to yesterday's intraday low, it corresponds to the golden ratio of 61.8% as well. So net, as long as any ongoing bounce that couldn't surpass the 20-day moving average, which correspond to this key short-term graphical pivotal resistance zone of 15680 slash 15710, we will flip to a intraday bearish bias, with the first support level to watch out for will be at 15490. A breakdown below 15490 exposes 15320 slash 15290, which correspond to the 20-day moving average, I think, as a support level, as well as this graphical support zone of 11 of December and 18 of December. However, if price action starts to pierce up above 15710, and what we could see is that we must see a choppy upward movement drift to revisit 15835 slash 15880 next. So i.e., in a nutshell, as long as any bounce that couldn't surpass 15680 slash 15710 short-term pivotal resistance zone for today, we'll flip to a intraday bearish bias on the dollar yen, with the first near-term support level to watch out for will be 15490. All right, so that's sum up the intraday technical outlook on the FX market. So now let us focus our attention now towards the major stock indices, starting with the Hong Kong 33. So the Hong Kong 33 outperformed against the US market yesterday due to the rather favorable performance of the Chinese AI startup DeepSeek. So it actually rallied, almost hit our first resistance level that we highlighted yesterday during the European session at 20,000, or during the close of the Hong Kong session at 20,520, before it shaped a pullback, and this pullback managed to find support at 20,170. But given that it haven't surpassed 20,520, we do not want to actually tighten our short-term pivotal support to 20,170. Will remains the same at 20,000, which is also the lower limit of this ongoing minor ascending channel that I drew from the low of 10 of January. So as long as 20,000 short-term pivotal support holds, we'll still maintain our intraday bullish bias on the Hong Kong 33. Next resistance to look out for after 20,520 will be 20,840 next. Only hourly close below 20,000 will a breakdown and an hourly close below 20,000 will invalidate today's intraday bullish bias to expose 19,685, followed by 19,350 next. And do not forget, over here is that in the next 2 days, the Hong Kong market will be closed for the Chinese New Year or the Lunar New Year break, and there will be less trading activity on the Hong Kong stock market. That means, i.e., the Hong Kong 33 may not be able to actually have much more we call it movement, something to think of over here. But nevertheless, these are the key levels to look out for. As long as 20,000 short-term pivotal support level holds, we'll still maintain that intraday bullish bias view on the Hong Kong 33, representing the Hang Seng Index. Now, onward next will be the Japan 225, which is representing the Nikkei 225. So yesterday we do have a bearish bias. It hit our support level before staging a bounce in today's Asia session, and where it bounced, it managed to bounce off from the 200-day moving average over here. So with that, scenario taking shape over here is that the bounce already coming very close to the short, to some resistance level that we actually monitored, which is the 39,710. So this 39,710, if we do the Fibo retracement, okay, it corresponds to the 50% Fibo retracement as well. All right, so in any chance of any bounce, we will use this 39,710. As long as this 39,710 is not surpassed to the upside, we will still maintain our intraday bearish bias for the Japan 225. First support level to look out for today will be 38,655. That may get revisited. A breakdown below 38,655 exposes 38,140, which is the minor swing low of 13th of January and 17th of January. And have a quick recap over here. Since the low of late September, 27 September 2024, it has been trapped in this kind of complex sideways range configuration. All right, over here. So however, if we start to see a price breakout above 39,710 with an hourly close above it, that would invalidate our intraday bearish bias to see the Japan 225 squeezing up towards the upper limit of this complex sideways range configuration, exposing the next resistance level at 40,010 and 40,420 slash 40,280. 40,280, 40,000. Okay, let me put it better writing. So should be 40,280 slash 40,420. Right, so IE in a nutshell, using 39,710 as my short-term pivotal resistance level, because it could potentially extend a bounce given that the RSI hasn't hit the overbought level. But however, as long as this bounce didn't surpass above 39,710, we still maintain that intraday bearish bias view within this medium-term complex sideways range configuration for the Japan 225. First support level to watch out for will be 38,655 for today, which is corresponding to the 200-day moving average as well. Right, so with that, now let us turn our attention to the European stock market, which is the German 30. So the German 30 plunged down as expected during the European session, almost hit our first support before staging a bounce in the late US session. So still no change, still using 21,530 as my short-term pivotal resistance level. We'll still maintain that intraday bearish bias view for the German 30. First support level to watch remains unchanged as well, 21,070. Only a breakdown below 21,070 may expose 20,940 next over here. However, if price action managed to see a squeeze up above 21,530, that means with an hourly close above it, today's intraday bearish bias view will be invalidated to see the start of another impulsive up move, exposing the next intermediate resistance of 21,680 slash 21,770 for today. Right, so IE in a nutshell, still maintaining that intraday bearish bias view for the German 30, still using 21,530 as my short-term pivotal resistance level. Right, so that's for the German 30. Now onward, next will be the US stock market. So the US stock market, the US Wall Street 30, that's representing the Dow Jones Industrial Average. Yesterday we do have a bearish bias view below 44,710 over here. Then the market actually plummeted as expected during the start of the European session. It printed a low of 43,840, almost very close to our first support level that we are watching yesterday in our bearish bias view at 43,730 before shaping a V-shaped recovery. And because of this V-shaped recovery, it starts to actually bounce off also from the lower limit of this minor ascending channel that I drew from the low of 13th of January, very close to the first support that we highlighted yesterday. So with that, now it's coming very close to the overbought level. It already hit the overbought level and now trying to do a retracement from the overbought level, as you could see in today's Asia session. So as long as this potential pullback didn't surpass below this short-term pivotal support level that we highlighted, 44,095, which is also the lower limit of this minor ascending channel, we will flip to a intraday bullish bias on the US Wall Street 30 for today. Above 44,740 exposes the next near-term resistance level at 45,090 slash 100 level over here, which is the all-time high area. All right, this is the all-time high area, 45,090 slash 100, and also the upper limit of this minor ascending channel. All right, only above this 45,100 potentially exposes 45,500, 45,000 4700 next. However, if price action starts to see an hourly close and a breakdown below 44,095, then today's intraday bullish bias view will be invalidated to see another round of a choppy corrective downdrift towards the next near-term support level at 43,730, 43,600. A breakdown below 43,600 exposes 43,095 next, which is correspond to the 20-day moving average. And net overall, given this positive technical element that has emerged on the US Wall Street 30 as described earlier, we'll be flipping to a intraday bullish bias using 44,095 as my short-term pivotal resistance level. Now, onward next will be the Nasdaq 100. So on the intraday basis, we know that the Nasdaq 100 plummeted, a very steep drop of yesterday, driven by the sell-off in semiconductor stock led by Nvidia. And we know that from a technical perspective, price action don't go vertical up and vertical down. There could be period of counter trend movement. And what we could see over here is that after yesterday's steep fall, the Nasdaq 100 may do a counter trend rebound move today over here. So this counter trend rebound move may retrace a fair bit of yesterday's steep we call it a decline over here. So for today, and what we could see is that the hourly RSI now has starts to actually shape a we call it a exit from its extreme oversold region. What we could see yesterday. Okay, so this is a deeply oversold region in the last 3 months or so, right? Yeah, it's the most oversold region in the last 3 months, much more lower than the previous low that was seen in 19th of December ex-post US presidential election. So given this very short-term extreme oversold, we call it a position over here, there could be chance of a mean reversion rebound taking shape at this juncture. So this Nasdaq 100 level may see a rebound, counter trend rebound that may unfold today from a technical perspective. So with that, yesterday we have a bearish bias. This bearish bias hit our support level, and for today we will flip to a intraday bullish bias. But this intraday bullish bias is only have a potential view of a counter trend rebound scenario. So on a bigger term horizon, on the mid-term horizon, the Nasdaq still remains weak. Why? Because of that intermarket dynamics I share with you all on the chart of the semiconductor stocks, okay, which is the stocks over here, okay, which I did earlier on the intermarket dynamics. But on the intraday basis, we know that price action don't go vertical down. There could be chance of a rebound, and today that rebound may take shape potentially because of this extreme oversold condition on the hourly RSI, and he has really exited from the extreme oversold condition and has started to print a series of higher low, okay, higher low over here, and hasn't made the overbought region yet, right? So with that, there could be still room to go for this ongoing mean reversion rebound scenario on the Nasdaq 100. So with that, I'll be using a rather tight short-term pivotal support for today, which is yesterday's US session close low at 20,990. So using 20,990 as my short-term pivotal support level, we'll flip to a intraday bullish bias for today for a potential mean reversion rebound scenario to play out. First resistance level to watch will be at 21,400. Above 21,400 may expose 21,610/21,730 next. We saw the yesterday's gap down, and if we do the Fibo retracement of yesterday's steep sell off, okay, the first resistance correspond to the golden ratio of 61.8%. The second resistance, which is the gap down, correspond to the 76.4 Fibo retracement level. Right, only a push down and the hourly close below 20,990 will invalidate that intraday mean reversion rebound scenario to potentially kickstart another round of impulsive down move, exposing or retesting yesterday's minor swing low at 20,690. Below it exposes 20,530 next. All right, so i.e. in a nutshell, we'll be using 20,990 short-term pivotal support, flip to a intraday bullish bias for this potential mean reversion rebound scenario to play out on the intraday basis for the Nasdaq 100, given that the hourly RSI has starts to exit from a extreme oversold position. Right, so that's for the Nasdaq 100, and so sum up the intraday technical outlook on the major stock indices. So now let us turn our focus now to the commodities market. So for the commodities market, that is gold XAU/USD. So yesterday we do have a bearish bias for gold. So gold actually hit our support level 2728/2719. This level is important. Why? Because it's actually the former medium term range resistance level that was previously 22nd of November and 12th of December, as well as 17th of January. Then has a bullish breakout on the 21st of January over here, that now turns into a key pullback support area zone, and where it bounces, yesterday it managed to bounce. It also bounced close to the lower limit of this minor ascending channel from the low of 31st of December. So with that, we will now flip to a intraday bullish bias for gold XAU/USD, given that it's now coming close to a key pullback support area. So using 2728 for sure /2719 as my short-term pivotal support for today, we'll flip back to a intraday bullish bias. First resistance level to watch out for this inverted V shape yesterday will be at 2770. Yesterday intraday high or minor swing high above 2770 re-exposes the current all-time high at 2790. However, if price action starts to shape a hourly close and a push down below 2719, that would invalidate today's intraday bullish view. See the extension of this ongoing minor corrective decline sequence or movement to expose the next near-term support level at 2690 next, which is correspond to the 20-day moving average. Failure to hold at 2690 may see further weakness towards 2660 next support level graphically, which is the minor swing low of 14th of January and 14th of January, as well as correspond to the upward sloping 50-day moving average as well. So net IE in a nutshell, we'll be using 2728/2719 as my short-term pivotal support zone for today, and flip back to a intraday bullish bias for gold XAU/USD. All right, so now lastly will be the West Texas crude oil. So West Texas crude oil, yesterday we do have a bearish view as well, and this bearish view almost hit our support level at 73. So this 73 figure level also correspond to the graphical minor descending trend line from the low of 6th of December. And given that the hourly RSI has just exited from the oversold zone, there could be chance of a mean reversion rebound taking shape in today's intraday session. So with that, we'll be flipping to a intraday bullish bias view for a potential minor mean reversion rebound scenario that could unfold using 73 figure level as my short-term pivotal support level. But first resistance level to watch out for will be at 74.80. 74.90, pardon me. Above 74.90 may expose 75.75/76.16 next, which is correspond to the 20-day moving average acting as a resistance, and as well as this still ongoing minor descending trend line that has kept previous rebound check since the high of 16th of January. All right, only an hourly close below 73 figure level will invalidate today's intraday bullish bias view for that mean reversion rebound to see the continuation of this ongoing weakness in West Texas crude oil, exposing the next support level at 72 figure level, which corresponds to the 50-day moving average. A breakdown below 72 figure level exposes 71.05 next. So i.e., in a nutshell, given that the yesterday's rebound is rather overstretched, we will flip to yesterday's decline, pardon me, is a bit overstretched. We will flip to a intraday bullish bias for a potential minor mean reversion rebound view that may unfold using 73 figure level as my short-term pivotal support level. Resistance level to watch 74.90. Above it potentially exposes 75.75/76.16, and this level here, once this level potentially hit, look out for any signs of bearish candlestick formation that could potentially resume this ongoing weakness that has been in place since the high of 16th of January. All right, so that's also sum up the intraday technical outlook on the broad-based cross-asset classes. So before we go, let's have a quick look at the economic calendar for today. What are the key data to look out for? So today will be Tuesday. So today's data will be rather quiet over here. So something even in the European session. So nothing key to watch out for during the European session over here. Let me nothing to look out for. Just have a quick confirm. So once come to the US session over here, the key thing to look out for will be some housing data at 10 p.m. Singapore time over here, and thereafter we have the conference board consumer confidence that is out at 11 p.m. Singapore time. and thereafter will be a rather quiet session. So now the key volatility will come out for the market will be on the 29th of January. Why? Because 29th of January we have a very early morning Asia session at 8:30 a.m. We have inflation rate coming out from Australia, both on a quarterly basis Q4 and on a monthly basis on for the month of December. That will be at 8:30 a.m. Singapore time. Australia key inflation data that could actually impact the Aussie dollar. And thereafter, we also have Japan consumer confidence at 1 p.m. that could impact the Japan 225 and the dollar yen. And thereafter, we have the Bank of Canada interest rate decision at 10:45 p.m. Singapore time. And most importantly, during early Asia session at 3 a.m., we have the US Federal Reserve interest rate decision, FOMC decision, but this is very likely more or less baked into the market. Markets expecting no change at 4.5%. And if you look at the CME Fed Watch 2, also very high chance that the Fed will not cut or hike on the 30th of January, Singapore time at 3 a.m. Very high chance. So what's interesting is that the aggregate of the CME Fed Watch 2 market participants is also still looking at the next interest rate cut may either come in June FOMC meeting or July FOMC meeting. High chance of 91% and 72%, and thereafter a chance of 74% or 90% coming in at 29th of the October FOMC meeting and the December FOMC meeting. So market participant is still only penciling only 2 potential interest rate cut this year, similar to the latest Fed Funds Federal Reserve official projection in their latest dot plot that was released in the last December FOMC meeting. And what could change this expectation of this ongoing 2 interest rate cut for 2025 will be Fed Chair Powell speech earlier at coming in later at 3:30 a.m. Singapore time, which is 30th of January. So this speech is very important. Why? Because most likely or high chance the journalists will quiz on a Federal Reserve Fed Chair Powell stance on his view on Trump's administration policy. How much will it be impact on the Fed thinkings in terms of crafting out their monetary policy for 2025 and beyond? So something to look out for that could impact the movement of the US dollar and indirectly translate to the movement on the major US stock indices as well. All right, this is something to look out for on Thursday. And on Thursday, after that we do have ECB as well. So ECB will release its we call it outcome on 9:15. So but that has already been priced to the market. It will cut 25 basis point because of that dovish statement ECB President Lagarde made during Davos conference last week. So more or less, market is now looking for every ECB meeting there could be a chance of 25 basis point cut. But what not has been priced in is a chance of a 50 basis point cut in the next meeting after tomorrow, and that potentially could shape during the press conference of President Lagarde at 9:45 p.m. Singapore time, where market participants will be hearing closely to ECB President Lagarde's view on Eurozone economic situation over here. Right, if she sounded rather dovish, that means there could be a high chance of more recessionary risk creeping into Eurozone. Then market participant will start to price in a potential 50 basis point cut in Eurozone in the next upcoming monetary policy meeting. Right, something to look out for. And also do not forget this week, at the end of this week, we have key earnings season in the US. Why is it important? Because this week we have the mega cap earnings that could actually drive the movement on the US stock market, especially the Nasdaq 100 and the S&P 500, because these are heavily weighted mega cap stock in the US stock market. So what's interesting, on the 29th of January, we have Microsoft, Meta, Tesla releasing their earnings announcement. So Microsoft, Meta, and Tesla will release their earnings after the close of 29th of January. That means early Singapore time, 30th of January, Thursday. And thereafter, we also have the next day, Apple as well. All right, Apple, Visa, MasterCard. So Visa, MasterCard, not so much of a heavy weightage, but that could influence the Dow Jones Industrial Movement together with Caterpillar. And most importantly is Apple, because Apple is one of the top 2 heavyweight stock on the S&P 500 and the Nasdaq 100. So it will release its earning US timing 30th of Jan at the close of the US session. That means Singapore timing 31st of January. All right, so with that, that sum up today's daily dose of market insights. So I would like to wish you all, for those who are celebrating the Lunar New Year, a very happy Chinese New Year. Wishing you all great health, great abundance in the year of the wood snake, and as well as daily dose will be taking a break in this Lunar New Year festive season. So there'll be no daily dose from tomorrow. Uh, Thursday, and as well as this coming Friday, and daily dose will resume again on next Monday, on the 3rd of February, at the new trial time of 1 p.m. So with that, I should speak with you guys again on 1 p.m. next Monday, 3rd of February. Thank you very much.